Hey everybody, it's Tim Rhey with True Rate Mortgage Group, and today we're going to talk about a question that I get all the time, and it is simply, how can I get the best interest rate possible? And I love this question because that's the name of my company, True Rate. How can I get the true rate? I've never had anybody actually ask me that, but that's a really good question. Now, there's several things at play here that we have to understand before we dive into some strategy. First things first, I want to talk about something called LLPA, or loan level price adjusting, or adjustments, I should say. LLPA for short. LLPAs are something that Fannie and Freddie put into play after the financial crisis in April of 2008. It's a risk measurement or an assessment that Fannie and Freddie puts on you that basically tells them how risky you are. And what they do is they've come up with all these factors: credit score, loan to value, which means how much of a down payment you're putting, what type of home are you buying? Is it a condo? Is it a multi-unit? Is it a single family? What type of loan is it? So all these factors go into the bucket of risk assessment, and they create what we call LLPA, loan level price adjustments. So if you have a certain FICO score, you could get a hit based off of that. So when people ask me, how do I get the best interest rate? Well, the first thing is to understand how this works. As long as you understand that your rate is going to be determined by that FICO score, then obviously the first rule of thumb is to get the best credit score possible. You could do this right now. You should be doing this right now. Understand that every 20 points, you're less likely to get a hit. So the difference between, let's say, 680 credit score and 700, you could prevent yourself from getting a hit. So if you're at a 719, figure out a way to get your credit score to up a point to the next tier, okay? Every tier is another risk assessment per the LLPA. Next question, loan to value, which is your loan amount per the home's value. If you put a little bit more money down, could you get a little bit better of a rate? Well, there is an LLPA adjustment at that level. So yes, understand that. It's not a guarantee, but just understand that. Third thing is, what type of property are we buying? If you're looking at a condo, for example, you could be subject to an LLPA hit. That's the first rule of getting the best rate. Now, keep in mind that these LLPA adjustments are going to apply at almost all lenders, because all lenders are going to sell your loan on the secondary market to either Fannie or Freddie if it's a conventional loan. Here's the fun part. Once you understand that and you've addressed that and you've put yourself in the best position possible with understanding how much you can put down and the benefits of putting a little bit more down, it's time to get your lender to tell you what he or she, what their rates are. This is what I call the hustle. And I encourage this. Now, I wasn't always this way when I first got into lending, because I was always worried about losing a deal to another lender with a better rate. What I've learned, though, is that not all lenders are created equally. Some lenders have rate options and pricings that have a little less fat on the steak. So what should you do? Well, number one, you should always shop lenders. Now, you may love your loan officer. It may be somebody you've worked with for years. I have people I've worked with for over a decade. Great people. But I still understand when they want to look around and make sure that I am still the best rate for them. I accept that. Now, if a lender doesn't accept that, it could be a red flag. Your lender should be willing to allow you to price check, hustle, check the rate, shop around. Ask your lender, is that the lowest rate I can get? And then go on to ask your lender, would you be willing to show me some rate buy down options? Now, a buy down, and I won't get into that entirely in this video, but a buy down is just your way of paying for a lower rate up front. So the lender gets their money up front, you get a lower rate up front. You either pay for that up front or you pay for it over the long haul. That's kind of the way I explain a buy down. Ask your lender to show you other options for getting a lower rate. Now, if it has a cost, that's okay, but just understand those costs. I always recommend getting maybe 3 to 5 different rate options to choose from. We call those rate and fee options for short. In other words, lower rate, a little more cost, higher rate, a little less cost. See all the options. Go into this with an open mind. And if you don't do this, then it's possible your lender may just select an interest rate for you based on their commission structure. That sounds crazy, but you got to understand lenders are set up to earn money on your loans. Some lenders make more, some lenders make less. Because of that, you should and have the option to suggest to the lender, I want a lower rate. When you start shopping lenders, it's really important that you stack up all of your lending options apples to apples. What that means is that make sure every lender provides for you an actual loan estimate, because if they don't, it's hard to tell who's giving you the best deal. Compare the fees with the rate. I have a separate video on that, but if you have questions on that, we can take phone calls and talk about it a little bit. Bottom line, get all your loan estimates because it's the same form. It's easy to compare line items, and you can simply go through and see who's giving you the best option. Regardless of all of these things about getting the lowest rate is important. You should also consider the lender that you're working with. There could be an online lender somewhere offering you a smoking interest rate. But when you read between the lines and you come across some of the reviews and some of the history, and you start to read things online, may not be a good choice. Just because they're offering you that low rate doesn't mean that you are putting yourself in a safe position. For example, that lender could have a bad reputation, could sell your loan off to somebody strange, could default. There are things that can happen. I won't get into that in this video. Get the best rate, but also work with the lender that you can trust. And like I always say in my videos, if you can get a referral from a trusted source, go with it. Well, that's it for this video. There are some details we can talk about outside of here. If you want to reach out, you can email at tim@trueratemortgagegroup.com, or you can call 970-786-0222, and I'm happy to field some more questions for you. Have a great day.